Does it give any of these investors pause, though, that all these deals are rather circular?
They are, but I think, again, the difference being that there's real money that's being made right now. Real money, real profits, real cash. The thing that I think can inflect us as we go forward here is this idea that, and you've already seen this with Oracle, right? And you've seen, the Oracle kind of, the debt ratios really change, where you're talking now about bringing debt because you're burning through so much of your cash, right? Cash has been a huge part of the buyback story for 15 years. When corporates learned with, how well rewarded you could be with buying back your own stock, that's become that was probably over the past 15 years, the largest single source of demand for equities, and it's a vol suppressor, right? You're shrinking the float, you're stabilizing bid under the market, and then when stocks are selling off, they're even more aggressive. If that cash is now being burned through in pursuit of this, Capex euphoria, and you start now having to bring more debt to kind of fund all of these things at the same time, the risk here, and something that I'm watching closely in coming quarters, is if you see that almost perpetually higher announced buyback number across S&P 500, which is largely these AI mega cap tech companies, if that starts turning lower at the same time that the debt issuance from these companies is moving higher, because that now has to be brought in too to fulfill all of these obligations, that's something I'm going to watch, because again, that buyback bid to stocks has been the number one source for stocks over the past 15 years.
John,